Hello, 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 hello. How are you, everybody? So, are we dumping or are we pumping? That's the question for today's show. And as you can see, I have the V for victory up behind me on the charts right now. That, of course, is the Bitcoin USDT chart. As I can see here, the background, just as I went live, just there, my thing changed its perspective. Well, anyway, welcome to the show. I hope you're all doing very well. Good evening, K-Doc. Good evening, Tony. Good evening, Jamie there as well, Trade Spotting. And that is great to have you here. So let's take a look at the charts together and see what we can see. What do we have going on the go? Let's check it all out in just a second after I run the intro clip. Well, that was fun, wasn't it? Always worth running that thing. It's always worth it. Right, cool. Okay, so we have this big old V in the background. What time frame is that, you're asking? Well, as you can see up there above the charts, there is the times all nice and big and zoomed in. So you'll never be wondering what exact chart we're looking at. And of course, that's the 15-minute Bitcoin chart, and there's this big old V on the go there. Is that a V for victory? Has the bull market returned? Are we going up? Well, I mean, it's a 15-minute time frame, so let's not get too massively carried away with anything. But let's take a look at where we've come from and what exactly, you know, where we've managed to achieve. And so far we've come back into the 618 golden pocket, and that's where we are right now. So it's a good time to be asking that question. Are we dumping or are we pumping? Because if we go up from here, then, you know, we're breaking past the 618, and that's good to do. And of course, then, you know, we're coming back into the contention of this area where we were consolidating at before and going into where there's going to be a lot more liquidity in the markets than just here, which we never really spent much time in either of these zones really overall, comparatively speaking, in the last wee while. So of course, going back into this territory over here in the 35 to 40,000 area would put a different spin on everything for everybody. Of course, then if we go down the way again and this doesn't look like any sort of recovery in the end, then it's a little bit less positive for the old bulls. So that's kind of what we're looking at the minute. Will we see this transpire into a bigger move on a larger time frame? So just checking out those larger time frames and everything, where have we actually arrived at? A couple of questions people might be wanting to know, you know, the answer to. For instance, did we get the measured move in the end off the triangle that we were looking at before? What exactly was it? Was it like this? More or less like that sort of a thing? And well, or was it more, we had it drawn in like that, right? So let's just measure this out and see if we got any sort of measured move off of it, or if indeed there's kind of more to go. Well, it's the logarithmic chart, and that's why that suddenly stretches right out. If I put it on linear for a second, you can see here as I just drag this up, the way it stays the same, bringing down on the logarithmic chart, then of course it expands out the way as you move it, and then yeah, we come nowhere near getting the measure move off of that. If it was a 60% style thing, then you could make the case for that. You can see here that that's about 60%, so we have made the textbook style measured move off of it, so maybe, you know, that's good. If we hide all of the drawings, we can see that in terms of structure, well, let's do this on the 24-hour time frame. Terms of structurally, where are we? You know, we're down below our previous inflection point in the market, in terms of our body closers and opens. Right now, what we're looking to is, can we actually close our bodies above this area and move towards the top side? And of course, in terms of those drawings in that triangle on this time frame at that point when we were at the 618 before breaking down again yesterday, the shape of this thing looked more like a descending triangle, as you can see just in this area. Then of course we moved off of that, so then the neckline on this one comes in around about 34k, the highs on it at 42k, so you're talking about a $8,000 move potentially. So 34,000 down to 29,000 is $7,000. That's not correct. There's your math. That's $5,000. Whoops. So we haven't had that full measured move off this thing either. Again, that's harder to see because of the old logarithmic linear thing. I could draw it in with a measuring stick if you like, I suppose, if you're thinking about this as being your neckline. You can see we never made it down towards the 26,000 area. So What does that mean? Where are we then? Where does that position us right now? Well, it positions us in terms of the 24-hour time frame with a slight downward trend on the go at the minute, with a lower high and a lower low, and a lot of work to do to start to reverse that overall schema. That's where that leaves us. It leaves us with a downward sloping support line as well down here that we've so far managed to, respect in these two moves, which actually are what created it. So we're waiting for that third one kind of to see if this is still the case. In which case, you could be looking down towards the 26,500 area as your target if we were to have that as a channel on the bigger time frame perspective, like along these sorts of lines, if we don't manage to take out certain key areas up above. So we're at the 382 at the minute, or the 618. Can we get past this 50% area, and then the 382, then the 236, invalidate that one and move towards the top side? Just before we move and look at the bigger time frames as well, just to put this all into context, I'll show you kind of where we've come from in terms of these moves recently, moving back up above 32,000. I think people probably saw that and sensed it, that 32,000 was a key area for us. It was as well because of these wicks before on the 12th of January and 13th of January, and then of course breaking that key area. I'll probably see this on a lower term time frame, actually, to be honest, a bit clearer, but breaking this area is, well, whatever, you can see it's what led to the downward movement thereafter. And now we're back up above the 32,000 area where that 236 is. The 382 on this one's in there at 33,986, call it 34,000. That's kind of coincides, obviously with kind of breaking past this zone that we're at the minute. But then the 50% on this one lines up close enough with the 50% over there. Structurally, you're talking about, can we get back up above the point at which, we started dropping down again, taking out this big candle here of the negative move of the entire 21st of January, and then thereafter, etc., on the way towards the top side until we have actually broken up above 37,500, and that's that number again as well that we've spoken about several times, 37,500. Then we've not really changed a great deal. If we just then go on up towards these larger time frames, then you can see that things start to they just show us that picture right there. We're waiting to see then in terms of if we do see a recovery in terms of the bigger term time frames, will we be taking out these tops in here at the 40,000 area in terms of our closures. If we look at it on the weekly, maybe that makes a little bit more sense to you. If we scroll back the way, scrolling back, you can see that of course this is linear. I'll put it on log since we're making comparatives, I suppose, comparisons between the recent price action. In terms of the this movement in terms of percentage basis, it's not massively out of the ordinary, and we've not taken out key areas such as 18,500 or 20,000, actually, let's call it 20,200 where the 1618 is. Since we've not taken out those areas as yet, then yeah, things are still looking pretty decent. Put it back on linear for a second. You can see the scale of these candles, obviously very, 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 very big in terms of actual dollar value movements of those during those days. In terms of the trading that was going on there, it was quite big numbers involved in all of that. I'm going to remove your thing, by the way, Zoner, if you're looking. Just got rid of it there. So in terms of the weekly time frame, then what does this look like then? And let's just go back and make a comparison with, now that we know that the scope of these things is very large in terms of their girth. There's an important area up above here at the 236 where we've had our previous highs, and it's more visible here on the weekly time frame. On the 24-hour time frame or the 2-day time frame, the 236 is talking about whether or not we're able to take out this intermediate area and move towards the top side without having faked out from any sort of potential patterns around those zones. When you see it on the weekly time frame, I think it makes a good deal more sense when you see the 236 there, having not actually taken that out in terms of these movements overall, even within the structure of where we've come from. And going back over to the left, then what we have over here is of course a reminder to us that if we don't manage to take out these highs and we come up and put in a somewhat lower high over here, like we saw in 2018 at the start of that period where was the end of that bull run, then of course that would be very, very, very concerning for all of us, okay? And that's the situation that we're at currently, which is nice because, of course, I put out a video last, the other day there, whatever it was, at the high, saying, is this the top and whatever else, and that's nice, I suppose. But of course, whenever we were talking about that, what we were talking about in terms of looking at this and getting kind of worried about the price action was structure and whether or not we're going to be taking out this area over here, for instance, at the 32k area. And of course, we have done that so far. And now again, in terms of, before we get anybody gets excited about great big moves down the way or whatever else, we want to look at the actual trading that we've got to hand here, then we'll bear in mind the key area of 38k or 37,500 in terms of movements towards the top side. And until such times as we've done that, then we're just trading in between, and that's really the key for us. Looking back the way to sanitize what we've been saying, when we came up here in the 24-hour time frame, did we have divergence? Well, on the DMI we did. Over here on the RSI, at the actual high in there on the 8th of January up here, we didn't actually have that divergence. So maybe the beat will just go on. It's important to be aware of that. Looking back the way you can see as well that we've really been put in an absolute stonking big high there in terms of that area, not having done the same since we actually did put in the previous all-time high. So could we go in and actually double that? Is this what to look for, that big 93 area, as opposed to coming up towards 90 itself on the RSI? Something to look out for over the next week or two, I suppose, because if this is not going to be the top in the market, then we will find out in due course, with a number of signs along the way, and we'll be keeping an eye out for all of that stuff. At the meantime, let's acknowledge that on the daily time frame, we're in a downward trend, at least until such times as we've taken out these this previous area, 30, until we go up to 40,000, we really are still in a downtrend. 37,000 again, 37,500 if you want to be aggressive about things and declaring that this is just the local bottom was just here, and this was kind of a little intermediate thing along the way, just a pullback, etc., etc. And that's going to have to influence our thinking then when we drop down towards the lower term time frames for just in this period, until such times, like I keep saying, till such times as we've broken the structure of all of this area. When we go down the time frames, maybe we can start to look to taking out the diagonal slope and trend line, and looking more keenly at areas like 36,000 itself. But really that's where we are. So our next target does still remain positive though, especially with this nice area, this nice turnaround that we had. Although we did see the same thing the last time we came down to that structural support area in at 31,500, where we had a nice V-ish type thing, if you want to talk about it like that. And then we saw a big old pullback and it recovered up the way, but we didn't take out 40k. It's the same story, same narrative playing out at the minute. Where will we see, if we do see a pullback from this point, higher low potentially come in? And then when will we see the higher high coming in? At this point here, we had to take out our all-time highs in order to put in that higher high, so it's understandable that we've continued to go down the way and give everything else a nice chance to cool off, including the likes of these oscillators over here. What else is there to really talk about at the minute in terms of this thing? You got the volume increasing as we're going down the way. That's to be expected. Whilst we have, of course, various factors that people will be aware of that they were kind of looking at, such as the sort of so-called head and shoulders of this area. If I just make this a different color, you can see it a bit easier, I suppose. Make that blue. That's your neckline. So you got your head, your shoulder, your head, your sort of shoulder area again here, breaking down the way, and then looking for a measured move off the back of that, I suppose. Then you're talking about, can we go down to, and then lo and behold, it's the same targets as what we've got anyway. So we know what the targets are, okay, and we know where we need to go to break the current lower term trend. We know how this is going to influence our thinking on the lower term time frames. We know how this stacks up in terms of the weekly time frame and the bigger story, 3-day for instance, and stuff like that. So I think we've tied everything together more or less that we need to. At this point, you could just go on and kind of look at the details yourself. Questions coming in here on the 2-day time frame with regards to the DMI, for instance, but then again, it's the lack of that divergence. Where are we going to find the support if we need to on this stochastics here, which seems to have had a trend line drawn in? I can't remember what time frame I drew that in on. irregardless. Hey, let's go with irregardless. I think it was one of the larger ones, but whatever. Will we see support coming in where we need to see it happen at? Time then, I suppose, for one little sort of lesson, I suppose, in amongst this, and that is a little reminder that you are able to consider areas such below the typically in terms of the RSI. When you're in a really strong bull trend and whatever else, then you can look at the neutral line as being the oversold area. We did speak about this last time when it was down here at this point, at the neutral line. You can consider that. Some people do, and when I say by some people, I mean like analysts that have written books about it and stuff like that. They do talk about it like that, so that, and that's worth bearing in mind. And I think that when you want to use words like oversold and overbought, I think that those terms are kind of a bit redonkulous, really, to be honest with you. And instead, what you're talking about is this is like quite bearish, and I like to talk about things instead of saying oversold or overbought. I talk about extremely bearish and extremely bullish zones. That's what I talk about instead of them being overbought and oversold. So you can think about that as being sort of your bearish zone, and the results of consolidation in that area to be perhaps influenced by that perspective, in a way that maybe they would have been if it had been in an oversold territory, or indeed another extremely bearish territory. So this is overbought, so that's extremely bullish, and at that point then you can look at this as being the where things start to get very bearish. Okay, and that's kind of how that dichotomy exists. So just remember then, if we do see this coming down to the neutral line, we want to see it respected, and that ties in nicely as well. This is the 3-day time frame as well, so this is no small fry stuff. What we're talking about here is, of course, a trend line that if it gets broken, then it's bad enough. The movement between this zone of the break down towards this neutral line is, of course, bad enough in itself. That's not good to see happening. So then at the point at which you break this area, then of course you get that slight sort of middle shorter term paradigm shift perhaps coming in, and that's something to look out for, I suppose, as well. Otherwise, of course, quick reminder, the trend is your friend, and until the end of that trend, it's still your gosh darn friend. On the 24-hour time frame, you could be asking severe questions about that so-called friend. Here on the 2-day time frame, you see this almost lines up like the ascending triangle is still in place, which we've kind of converted into this channel, the ascending triangle, I should say. So that's still in place. So warning. Therefore, we've not recovered anything until we break that structure. So that's how the narrative about all of that ties together. Yeah, that's fully comprehensive. That's absolutely everything you could need to know. We can put that context into work now when we look at this in terms of the 15-minute time frame, for instance. Are we going to see in this area a shoulder followed up by a head, followed up by some sort of shoulder here, whatever, with some sort of neckline and around about this area? The psychology of it's more or less kind of that bland, simple psychology of trading, which people like to present as being sort of level 2.0 extreme godly ability, but it's quite simple really, and not to be overthought. This whole zone here is going to have an area of real questions being asked about it. All the threes especially, I think, as well, all the threes, 3, and then of course coming back up past this area, then of course is a key horizontal support and resistance line, as we can see kind of looking over to the left there with where this orange line is. Bearing in mind that orange line is of course the lower end of the descending triangle on the 3-day time frame. So in terms of these small perspective things, managing risk in around this area is as easy as pie. One way of doing it, for instance, would be to think to yourself, what sort of move could you possibly get if that was a head and shoulders? Let's just call that the neckline right there, and say that, and bear in mind again, I should have that. I don't know why that stretched out. It looked like it stretched out to me. It might just be my perspective or whatever. Anyway, so whatever. Yeah, that would be kind of a potential target for you, perhaps. That takes you up to 37,500, and then of course you could be managing your risk like this sort of idea, giving you a 5-to-1. I'm not a financial advisor, none of this is financial advice, but that's the sort of thing that you could be looking at, and that of course is called a trade setup, which is being delivered with a comprehensive look across the timelines with a whole argument to be made there. Then if you wanted to, of course, to think about things logically, you might have little lines like where you call toilet paper 1, toilet paper 2, stuff like that. So toilet paper 1 could come in around about this zone where, of course, we know that we've got a 35,000 round number. We've got the 382, is that right? Or the 50%? Sorry, the 50% coming in there as well. The lower, the sort of the supply line of the for the pattern, which is still in play on the 3-day, but which we may have broken on a lower term time frame, etc, etc, etc. That's how you do it, folks. And if you want to tell somebody then that you're doing a head and shoulders and that you've got a context on it for this area, you know, in this small term time frame, and you wanted to really kind of legitimize your trading and have a proper journal, then it would be ideal if you were able to put what I said there into some sort of note form. And I know that that's hard to do, but it's quite simple, really. It kind of goes along this lines, and I'll probably use this little snippet as a little cutout from the video for folk, you know, and publish it separately afterwards. So I'll say hello during it, and I'd like to say hello to everybody that has joined us right now, by the way. To all of you, if you hit that like button, then I'd really appreciate it. So here's a quick Bitcoin summary for everybody. Thank you for joining me. If you're looking at the 15-minute chart, we've come up towards a key area, which is actually the 618 golden pocket zone in here between the sort of 33,333 area up towards 33,666. Pushing on past that could, of course, open up an opportunity for a trade based around this sort of 5-to-1 concept here, with an early take profit in here at around about the top end of what actually is the downward sloping support line of a descending triangle on a bigger time frame. If I just clone that TP1 and stick it in here at TP2, that actually is the blue line here showing you the measured move that you'd get off of the head and shoulders if you consider this area here to be a shoulder and this to be a head, and then something in and around about this area to be a shoulder. Now, is that actual shoulder come in yet? Well, it's debatable, but we're certainly past the conceivable neckline zone right now and asking, will we be retesting it? Now, how does this pan out in terms of the bigger time frames and what we're really looking at with the grander story, based on the idea, of course, that this being a 15-minute candle opportunity, and failure here also operates with a similar sort of move towards the downside if you want to play it that way. I'm not a financial advisor, none of this is financial advice, but we can see the context of this a lot easier when I jump up a couple of time frames. Now, looking at this chart, you could say that perhaps we've got a downward channel here, and if I borrow that orange line that we had on the chart there, kind of showing us where the neckline of that head and shoulders was, that we're kind of breaking up past at the top end of that 618 golden pocket zone there, and then re-jig it so that it fits on here, and try not to spend all day about it, then you can see that perhaps we have a kind of channel on the go here. So failure to push past take profit 1 means that we're kind of remaining within the channel, and of course there you have that 618 pocket there that, of course, our squiggly neckline is residing on. But then as well, this could have been at some points in the past different types of triangles, and maybe, you know, we have a textbook satisfaction of a measured move, borrowing that head and shoulders one, saying that if there's a 60% move, you know, to use Bulkowski's type textbook, then perhaps we've achieved that with this low that we got in there at the 29,000 area when we dropped down there yesterday, coming in as low as 28,88888. So is that possible to have happened, and have we satisfied that triangle? Yes, we could have, but then again, we could have also just broken out of another triangle here, 1 touch, 2 touches, and then 3 touches, but then we broke it at that point. But that's a little bit kind of speculative almost, as well as when we look at the bigger time frame. So just to draw the whole story together, that line going back to where it was before we moved it here on the 4-hour and jumping up to the 3-day time frame. And when I zoom on in here, you can see that we are retesting what could potentially have been a descending triangle. Here we have it more visible on the daily time frame, and we haven't had the full measured move off of this, but we've come darn well close to that. And if we jump up towards the weekly time frame, we can see that as yet we have not actually broken out of the structure of that movements back up towards the top side, coming in here with a potential sort of take profit target number 3 before we actually get concerned about moving past the structure of the overall downward trend. Let me just actually clone that there so that you can see that there's come on, clone, so you can see that there are the 3 different levels of take profit off the back of this, and that of course is kind of letting your winner run stage and not trying to get too greedy and coming in here just at where we've seen the weekly closes not manage to actually break, which is the 236 Fibonacci retracement point. And what is that Fibonacci retracement point, you might be asking? Well, let's just jump down again towards the 12-hour time frame, or the 4-hour time frame as it is actually, to show you that's coming in from the highs we had up there at 42k down towards the coming from the lows that we had here, the last significant low at the 28,000-ish area, more or less, where we came down to here, but not quite, and going up towards the top side. Final note on this, I suppose, is everything also can be viewed again from various different time frames in terms of just little simplistic tools such as the Dumpin channel. If you'd like to know more about those and certain trading techniques, check out TradeSpotting's video that he published recently. I'll be putting a little card for it right there on this one. My name's been Rocky Outcrop. I do live technical analysis all the time for all various cryptocurrencies. Be sure to hit that like and subscribe button if you want to see more of this, and that bell. Okay, cool, nice one. And on with the live show, just so that people who have tuned in there now know that I'm not actually tuning out. That is, of course, though, the end of the Bitcoin technical analysis. I think that was pretty neato, really, for us, and has an awful lot in there in terms of value. So if you're finding value in this episode, be sure to tell your friends and family about it and all that sort of good stuff, and share it with friends, because a friend of yours is a friend of mine. I hope the audio is okay in this one, by the way. I've been trying to keep my head in a more or less consistent location. I will be checking in with all you good chaps and chapettes in the chat in not that distant future. By the way, hi to Tony, hi to KDoc, hi to Jamie, hi to Artie, hi to Christopher Pipe, good to see you, my friend. Hi to Stanley Knife, nice name there, Stanley. Hi to Artie, hi to Shivam, nice one, good to see you again, Shivam. LTC prediction, please. Well, there we go. Check out Shivam's amazing skills. He's learned how to put please on the end of a sentence. Nice one. How about we take a look at that and other ones in a wee whiley. I'll just crack on with the show at the minute and go on with what we're going to be talking about anyway. Everything that I talked about in the Bitcoin one does give you a pretty good basis for coping with the technical analysis here on the Ethereum pairing without any real stress for you in terms of everything, all the concepts, the major concepts having been outlined already. The last major low that we're looking at here for Ethereum, by the way, and thank you so much for joining me, and hi to everybody in the chat, is this Fibonacci was drawn in from down there at those lowly lows of 309 buckaroonies, looking in there at the 23rd of September low or so, and then coming up here towards the high we had at the sort of 19th of January when we put in our new all-time highs. That's a nice significant area for a Fibonacci retracement point, and there's a few key things that we can see about this one just to kind of give us a basis to understand what would happen if we broke down past, for instance, this key area here at $1,000, which we will examine in more detail in a moment or two. First off, the areas that we have to look at really in terms of the near-term time frame, near-term basis, is the 236 in there at this $1,150, $1,175 area. Now we know that in the last couple of days, jumping down to the 24-hour time frame, we've come down below that area, closed below it, then of course opened below it, and then come back up above. Not getting a couple of consistent closes below. Indeed, we did do something similar over here when the Fibonacci was last lined up like that, coming down here, closing, opening and closing here, but then not really getting that follow through and bursting back up the way. So far we've gone and done the upward movement to satisfy the this now potentially being support again for us. Will we see it act as such should we need it to? If not, then of course we could be looking down towards these other targets. First off, let's see if we're actually able to break down past the $1,050 down to $1,000 area where we have our previous low coming in, and whether or not, of course, we have the more significant support and resistance operating on our favor again, as we have actually seen within the last 24 hours. So then after that point, if we do go down the way, now bearing in mind that there's a there's a bigger chance that we won't close below this from a statistical likelihood point of view. Looking at this, we'd say that the chances are that we won't close below this. That's statistics for you. And who can trust them? Statistics can be used to prove anything after all. But, you know, if we did, and let's say that happens around about a third of the time when you have a properly drawn on one, and let's just you know, see if that's the case. Well, we did kind of come down here, but didn't get any follow through, so we didn't really break that at that point. Going down the way, no. 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 So as you can see, to say that it doesn't break it, you know, 7 out of 10 times is fair enough, right? So there we go. And if we were to, though, at that point, whenever that's broken and we're getting a bit of follow through, there's a solid chance, an 80% chance, that you're going to go on down the way and test a number of these down below. And of course, then that does give you a downside target coming at around about where the lower end of the Dumpin channel is here on the 24-hour time frame. So it's a very scary point of view, that, and it could be that 30% pullback that we have been saying is going to happen at some point if we were to go down to any of those areas, of course, you know, depending on where we dropped from. The neckline of this could be one of those areas for us, so let's bear that in mind. So between the 1050 and 1000 area, then we have a sort of neckline here. And what is this then? That's perhaps this Adam and Eve type formation that you have at the top here, if this were to be the case. Now, how does that line up with the oscillators down below and the DMI and the RSI and the stochastics, giving us that divergence here at that top, giving us, you know, that warning that perhaps we should be really bearing in mind the significance of any pullback structurally with maybe a bit more concern or prudence perhaps than you maybe otherwise would have without that warning coming in the way for us. And the neckline lines up with more or less kind of where we're seeing the Dumpin channel area for us just there. If we jump up to a bigger time frame such as the 2-day, then you can see then of course the 382 and the median line of the Dumpin channel line up perfectly, as you would more or less expect, given the quite structured nature of this rise, which has been at parabolic at times throughout, you know, really. In fact, you could call this whole thing parabolic, and it still remains the case. So if we do break that, then the first target to be looking to would be that area. Now that could be operate as a bounce for us, and at that stage then we could look at the trend from a broader perspective and say, are we changing the direction of the trend? If we combine this analysis with the Bitcoin analysis, by the way, just for a quick interlude, and if you are just joining me, hit that like and subscribe button, I appreciate it. You can see here that versus Bitcoin, what we've actually done is really managed to break past the 618, go up towards the top side, and in fact, you know, in terms of all of the Fibonacci targets on this thing, we've beaten them all so far, and we're looking towards the maybe perhaps, you know, if we can take out this one area, which would be your next target if this bullishness that we're seeing continues, then you're looking up towards 0.05, 0.06274. First off, 0.0406 being a big enough challenge for us, and that's a massive percentage move away from where the prices are right now, looking at 8%. Of course, big enough from where we were in terms of earlier on as well, down as low as this point, coming up towards that 406 area is a 14.5% move. So there's plenty of trading to be done here, lots of volatility, but could we see that kind of kick off? And if we do take out that area, and then of course this forms this, you know, looking back the way, what that means is that this was indeed some sort of cup with handle, although of course this doesn't really work along those lines. It doesn't work in terms of the volume, it doesn't work in terms of the previous trend, whatever else. That's completely besides the point. I'm just kind of showing you in terms of the structure and how these things all link together. By the way, at this stage, that would look like that because where did we come down to in the pullback from the lows to the highs? Well, it was around about that 50% area, and that would be a nice handle. But of course, if this doesn't work with that previous trend, scrolling on over towards that direction again and seeing what else it lines up with, you know, then scrolling back the way, you see there's this dip here with a rise, and then putting the whole thing into context, what that actually means is you've got a shoulder perhaps ahead, and then a shoulder over here with a neckline here at that crucial area that we spent the first couple of minutes talking about in there. What are the precursor towards that? Well, you have this downward trend here. This is what you would expect to see in advance of inverse head and shoulders, and it's huge, you know. And overall, the move off the back of this thing takes you from excuse me about the sirens outside, but they're getting excited about the prices. Lo and behold, the target that we mentioned before at 0.062714. So that's how you get from here to there in terms of that happening, and it would be interesting to see if there was continuation in terms of this downward movement in terms of Bitcoin, while we saw sideways or upwards in terms of Ethereum, and then of course that alt season type scenario starts to play out, which is the one, it would be the first time really, you know, in all honesty, that we've seen that happen since, well, the other alt season, so 2018. Really, there was it rhymed, but it wasn't the same in August, you know, in that run up to August with the highs, but that wasn't really the same sort of thing. If that's what we're looking at, then that would be interesting to see. In terms of the low term time frames, I don't know what you could be possibly wanting really beyond looking at some, just, you know, looking at this V for recovery and saying, well, if this is a sort of V for recovery, then we'll need to see this remain in place by not taking out the low of this Dumpin channel over here, or of course the 236 coming in there at 1224. If we actually do that, and at this point here, then you're looking down the way, and of course this would just simply be a higher low any point up above in terms of closures, this 618, which is in at this point just here. It's not actually visible in that Fibonacci. Let me just bring it back in again, is for us 0.618. there we go, there she is. So see, anything where we come down here and just test and go up a way, then that would just be simply a higher low from a broader point of view. This doesn't look so much then at that stage like, you know, anything particularly V-shaped recovery about it, because ultimately in terms of this thing here, the sort of the V of the V has to, you know, we're still not there in terms of the E part of the V overall, but you know, we're on the way towards doing things, and that's why those key areas have been discussed in detail. Okay, cool. So there we go. That's probably the best technical analysis that you can get for Ethereum, and lots of it was based off of the knowledge that we got from looking at the Bitcoin chart beforehand, and giving us a nice fertile bed of soil to plant our seeds of knowledge within. Cool. So let's just jump on over towards Link USDT and then make the next stage of that comparison. So what did I say at the end of the Ethereum one there when I was talking about the part of the V? Then well, what do we see here with regards to the of the V on this one? Well, we see very much that the E is actually managing to supersede the price action of the V, and we're now looking at the high 21, you know, 21.9. If we just want to sort of round things off, you can call it 22 if you're being broad about things. High to Northwest Nerd, for instance, you know, who watches the Link sections and buys Link all the time as a believer. He's not going to sell it in a hurry, but you know, right, anyway, in this area, this is the key for us. Can we stay above this now that we've got it? If we can't, that's okay. I suppose that's just the initial sort of short term area, this one, in terms of just, you know, trading this on the fly and whatever else. The next area to really be aware of course, is the 21s, and we've been in and around that zone quite a bit recently. If we jump back up towards the 4-hour time frame so that it can become a little bit more visible for you, collapse that menu there, we don't need it open. Obviously we've been down below all these areas, and this is just exactly played out to plan, more or less, in terms of if you had wanted to short it at that red line at 19.7, for instance. What would you be looking at? A 10% move towards the downside. Of course, the recovery from it was rapid, as we can see here, within 4 hours. So you would have needed to have, you know, actually, in truth be told, within a much shorter period of time, you would have needed to have managed that perhaps with stop losses and whatever else. But of course, there's plenty of opportunities here with knowing your key areas. Now, just in terms of the short term, right here and now, that's our level at that sort of 21.9. But let's be honest, it's more like 21.5, and then the next area in there at the 19 area. Can we sustain those, as we actually have done really so far overall? However, there are signs, like we saw on Bitcoin, of the potential for a downward trend. Now, we are of course breaking that at this area, but that's well known to us, this being a key area we already kind of examined in detail. Going down again back to kind of where we started at, the 15-minute time frame there, and looking over to the left, you can see that there's a whole cluster of price action in this zone. So it's no surprise that we're seeing a bit of of you know, the liquidity in here, giving us this this oscillation in price, and of course this constitutes sideways here in this section of time, and that's consolidation. And consolidation here at a key area of course support and resistance, you know, previously resistance, flip support. This is of course perfect to see. That is exactly what you'd be looking for if you're looking for something to happen in these areas. Because what does this mean? It means we've come up here and of course we're resupplying, you know, we're taking a breather. We've made it, you know, we've made it from base camp up to the first section of Everest here, or maybe, you know, whatever particular level you want to talk about, and we're just kind of having a wee breather with some oxygen and looking up at the peaks. Now of course we need the weather to be good here to get up past our previous peaks as well if we are going to continue mountain climbing. And in terms of like the VPVR, you know, the forecast would tell you that there is of course clear skies ahead, as we can see here with the drop-offs. But what we talk about in these areas as ever so often, how, you know, it's like the young lad that wants to ask the girl to the dance, gets right up to her, and there is a definite yes here if he were to just have the bravery to do it, but for some reason he can't find the fortitude within him to actually do that. This is where it comes back into play again with the consolidation that we're seeing in at this point just here, and the benefit for doing it right now. Why? Because any measured move that you would get off of the distance between the highs there, and of course our blue line lines up neatly with the distance that you see over here in of course the Willie won't he ask the girl zone. Now of course then the moment of hesitation which comes in when she has to actually decide if she wants to go to the dance with the spotty nerd comes in here at 23.27, and I can expect that to be another profit taken target. If we do then go past that, we already have a really good idea about where the targets are towards the top side thereafter, and it'll come as no surprise to anybody for me to say that 26 is another one and 27 is another one of the targets we've already talked about in the past. But if you're looking for the next target in mind, the next one to have is going to have to be 25. We've already worked all that out in the past with particular attention paid to Fibonacci retracement points extensions. For instance, if I just drag one of these in over here, then you can see that this 27 area is where the 1618 is. Actually, you know what, it's high 27s, it's 28 would be better to call it that. So let's just grab that arrow, pop, there you go, 28, rewrote history there. But that's what we're looking to, for instance, with just a target. Now there are 3 targets in between, like we already spoke about from other various Fibonacci retracement points, yada yada, but that's all good. That's the ones to be looking to, and that's where the market could potentially want to see it go if we get momentum to carry us through. What would give us a good basis for looking towards that momentum? Well, it'll come as no surprise yet again as I circle in on this. Now this is just the 15-minute time frame, but this consolidation could be nice if it translates up to the continued movements towards the top side, whoops, that you would want to see in a lovely recovery move in a part of a strong term upward trend, giving you the this to say is a local low with the end of this downward trend here, and creating this as a bull flag, based on the fact then that we have got a lower low here and a lower low there, low and it didn't come any lower, so we don't have hidden bullish to be aware of, but we've respected all of the trend markers for us, highly expanded stochastics, you know, so we want to see a pullback. Then that comes into a question of the counterintuitive point here to be made is, do we want to see the pullback happen from here? Well, naturally no. So the bullish case emphasis really does come back into the 25 to 27 area here, because anywhere in this point a lot of people could breathe a sigh of relief. But apart from the longer term bears who are thinking, or bulls who are thinking that we want to see this go up all the way up and take out the divergences that we're seeing here in the 4-hour time frame compared to this high over here. So in terms of the 24-hour then, what does that look like? Well, that looks like the slight divergence as well, actually, as well in that one. But if we were to go up to those areas of 27, etc., the likelihood is that we would actually burn that off, and that would translate back down the time frames again as a nice trending move. And in the fullness of time, what you would say is that we simply came in and gave the oscillators a nice chance to reset. So, but what did we mention as well once in the show earlier on, to bring things back around again full circle? When you're in this area up here in the overbought territory, over extremely bullish, let's call it, territory in here, then you can look at this zone as being that overbought zone, oversold, if you like, in around here. Now of course, until such times go from this as being oversold to being extremely bearish, then which would be us going down into the bearish control zone thereafter, then you can expect a potential turnaround, and we've seen that happen so far. So the question really comes back in again: can we see this go up the way? What else happens? And people talk about are dismissive of RSI divergence so often, and they forget to talk about the full story. Well, what is this thing here? This is of course your previous low. What is this over here? This is higher than it. That means we've got that upward slope. So when we had divergence, this is the wrong time frame for that. Stop saying Rocky. When we had that when we've got that divergence on the go, then we would need to be taking this out. We didn't previously, because that's of course our swing failure point. I'm looking for that divergence. I'm not seeing it right there on the chart. Where is it? Stop saying Stop saying Oh, this is just potential divergence currently. Right, sound. Well, in that case, if that is the case, just going back a second, it's not this low over here that we need to be fully aware of. It's of course this one over here, and that ties up nicely then again as well with the idea of going into the bearish control zone at that point, because that's where your swing failure would be, giving you all sorts of confirmation about movements towards the downside, getting another really healthy retrace if that were to be the case. But that's not the case. Hiding all the drawings off the way, that is how you explain what's going on here, which could also be summed up in a number of other ways, such as how you could look at this and say that there is as a sort of a broadening type structure here on the go, or various other ways of where you're looking at where you're going to look at this and ask questions then, I suppose, about whether or not we've got an increased volatility in extreme areas, and to look out for our previous high and lows with greater attention paid to the wicks, and taking out the on the time frame you're looking at, and whatever else as well, because of course that'll be structural support on lower time frames, which is what we see if you're breaking down past these areas. But I think all of us will kind of be aware of that. If you go down past 17, 18, you'll have not been in your trade, because we already identified 19.2 or something like that as being your key zone. That's Link in all of its fullness. Everything you could possibly want to know about it, really, to be honest with you. And another lesson there that tied in as well with the previous one. I wonder if we're going to see another tie-in as we move over towards the Tezos price here for us. Well, we've got the same sort of situation here, but this is slightly different in that we would really be taking out a structural high. We're looking to the left, a lot more here to be said about whether or not we actually fully recover and go past 322 in terms of our movements here. This would be much very, very, very positive for the price overall. Looking at the previous lows as well, we didn't take any real structural concerns out, managing to stay above the key 222 area, going down as low as as low as whatever that was, I don't know, 231 in fact, but not down to 222, and then recovering very, very, very nicely. What a move that actually was in terms of taking a trade up to where we are here, a 35% increase in price today alone. That's always nice to see with your coins. How's that actually performed with regards to the Bitcoin pairing right here? Oh, look, we can see that we're stair stepping very nicely, having taken out this 236 at long last, and right into this zone here. Kiss the girl and run away. Well, not so far. Very, very good. Let's see then. That's nice to see that. That's nice to see that is. So it is. That's just the 4-hour time frame. I'm not going to go getting carried away about things, but this point here is going to be crucial for us if we were looking towards the next area up, just in terms of our structure, because we still could be, from all of the chat that we had before, and that ties in at, that comes in at about 347. So that's our next target. If we fail to take that out, then of course we could be looking at a downward move thereafter, this being a lower high for us. If we do, there wouldn't be hidden bearish divergence on the go, so that's decent. If we do take out our previous high, then there is that case to be made for divergence, which there was between these two highs previously as well in the 4-hour time frame. That would have been nice to have been looking at. If I'd have been doing a show yesterday, then I would have pointed that out obviously and said beware, because there could be a pullback. I would have probably have looked down here towards the median line of the parallel channel and boom, and said probably would have said yesterday, if we we're looking at it, that somewhere, you know, between this parallel line here and of course our key area, which happened was this one here, this key line at 28, so it came down to pretty close to it. Then, you know, coming back up here, taking that area, it's going to be good for us. We need to sustain prices above $3, which, you know, is what we're doing right now, and then we can look towards higher targets. So that's what would have been said yesterday, and that's what's then resulted in happening so far today. Great, give myself a hypothetical pat on the back for something that wasn't said, but there we have it. And now we need to see if we can go up past this 325 area. Doing so means that 350 is very much the next shout on there for us. And we know that from this area where we are now up to 350, you're talking about another 15% up. So there's huge moves to be made constantly. And where is that white line? Well, what is the significance of it? Well, that's the golden pocket. So really, you know, and let's just then stick on the 618 number as well, because that'll give us that little zone to look to here on this one as well. So anywhere in this area is going to be key for us in the near future, and that's tying in right at the top end of our pitchfork. Wouldn't it be lovely to discard this pitchfork and look at the breakout potential thereafter, having, you know, recovered in this downward sloping yet potential recovery format of that pitchfork? Wouldn't it be? Yes, it would be. So we know that our upside target. So what do we need to maintain in terms of the price structure? Well, again, 328 good, 228 good, 250 another decent, or 260 to 250 is decent buy entry at this point in terms of maintaining a higher low. We don't want to go back down to going back down below 230 at this stage is putting in a lower low potentially for us, you know, so things would be very sketchy in around that area where their previous lows actually closing at 245. So we don't want to see that happening for sure. So so those are key areas for right now. All of those lower ones potentially offering up buy opportunities until we're seeing closures below the 230s. And until we're seeing movements above 322, then we're not going to get too excited about 350, but that's the next two stops up for us if you're already in a trade. If you're looking to manage your trade here, then bearing in mind that there's a great deal of risk in this area where you have the potential for a small term sort of turnaround here with this high. Got to stop saying M so much, but the way that you would manage this would be fairly easily if you want to be aggressive about it in the right here, right now format, and that's kind of looking at around about this sort of a move for you, you know, staying above the 290s, then, you know, you could still be looking for that 350-ish area high. If you go down below it, then there's probably going to be a better opportunity for you to buy in for that particular trade, or at least it's worth waiting and kind of keeping your powder dry until you know what the situation is resolving out. Like if you want to trade this particular setup right here in the here and now near enough. Right, cool. That's us done everything that we wanted to do. The question now becomes, do we take a look at Shavam's requested coin? Really should hide that menu there when I'm doing the TA, but oh, it sounds like I've got a horse in the room now. Who else has joined us since? Bruno, good to have you here. Nice one. What else do we have? Bruno was saying, I really need to study trading. I've lost quite a lot of money recently. Going to stay in the sidelines for now and try to learn. Well, trade. Obviously, it's always different when you're trading with a real account compared to a paper account. So it is obviously always going to have that dynamic there, which you probably know all about already. So, you know, that's a dynamic for you. When you're trading, the best thing that's going to help improve your trading is to have a journal where you write down all the reasons why. Now, if you look back at the Bitcoin video, I show you the full-on look at how you could do the TA from across all the different time frames. I'm looking at the wrong thing. Across all the different time frames, and in order to come up with a justification for just one move on a 15-minute time frame that you might have to have waited all day for, with only it being speculative, up until the point where you maybe have got to the stage where you could have put on a trade, knowing all of the reasons why beforehand, and actually be able to justify it in a way, and then say, well, fair enough if it doesn't work out, and iteratively improve on that. And a trading journal will be your fastest route to that success. Of course, you know, for instance, for me, I have a trading journal quite a lot of the times, because if I want to kind of understand why I made a move on any coin that I've looked at in terms of these cryptos that I look at on a daily basis, then I can see it in a video. But of course, as well, I do still take notes and stuff like that, and I leave them on the charts for myself to look back at. Whatever format works for you is probably worth looking into as well yourself. So there's a wee tip for you, I guess. Stay on the sidelines, do what you like. That's all good. You know, there's always opportunity. People like to talk about FOMO as if it's a real thing. It's not. There is no missing out. You've never missed out on anything. You just haven't missed out at all. Because there's always opportunities. Okay, that's just it, and there always will be more opportunities. We won't be able to predict what opportunities there will be. There'll be that many of them. Looks like a didgeridoo turned into a huge flute, says KDoc. Well, that's a lovely description of something earlier on. It's a Techrostar mezzanine, says TradeSpot. Yes, that's right. That's what that is. That's what that is. Suppose those high ceiling flats do have tons of wasted airspace. That's right. Decided to take advantage of that there with that space up above. That's cool. So everybody's getting along really well. 8 concurrent viewers. So there we have it. Clearly earlier on when I did the analysis of Bitcoin and we got to the summary point and I was like telling people don't tune out at the end of this when I say cheerio, and then I kind of sort of said it but tried not to really, and then still said stay tuned. That was probably the peak of the concurrent viewers on the stream, I wonder. But they're all dead now. They've all died. So that's that. I guess I probably should have been more carefuler to not say cheerio. Anyway, we've looked at all the different altcoins I like to do to satisfy the subscribers. You know, by the way, there's 2,000 odd subscribers to the channel. I do the technical analysis for Chainlink and Ethereum and Tezos and Bitcoin all in every one episode, because ostensibly there are people within that group of 2,000 who want to come back and see the episodes. But the actual truth really of this, when you look at it from a neutral perspective, is that you learn so much by looking across all of the charts. As I tried to demonstrate when I was taking lessons from one chart and applying it to the next one as we went through them, there was a sort of narrative that built up with an in-depth detailed explanation with the Bitcoin one, and then hopefully helps you get context and whether you trade these things or not, and you can see how these things kind of line up a bit more, and the reasonings, the justifications, and why one's good on one and not good on another, etc., etc. And hopefully then you learn something more from it to take into whatever trading that you actually do, because I fully expect people to be trading a whole bunch of different stuff at the moment. There are various different options out there for what people could be trading, one of which, the best performer today, really one of them, is Tezos. I mean, with its 22% up against the dollar, wonderful stuff. There's also the graph, you know, which has got the sort of the giraffe graph chart. Engine token, which has been doing so well recently over the last wee while. Again, another strong move today after its big old test off of the median line of the Dumpin channel right there before moving up the way on the 24-hour time frame. Same questions overall though come into play when you talk about the structure here, how we took out, let's just dive down the way to something like the 4-hour time frame, how we took out this area just here with this low, how this high so far hasn't taken out that one, how's this going to perform for us? Similar sort of questions. Then you've got cover over here, CRV, another really good performer today and keeping on with its overall 4-hour upward trend, which is really nice to see. Having been trending towards the top side almost since the 24th of November when you look at it in the broad perspective, and you want to take these lessons and apply them to everything that you'd have been looking at yourself with trading them. You know, when I talk about the two types of measured moves, for instance, talk about how there's the full measured move, then the sort of the textbook style 60% efforts. This is logarithmic, so neither of these are going to line up really. So that was a failed pattern. So there we go. Anyway, failed pattern, failed example on the charts. Failure, everything, Rocky. You got that channel kind of, whoa, look at that when you do that on logarithmic. I just love the magic of all that stuff. Anyway, forget it. Who cares about that? You can do all the same sorts of things that we've been talking about with regards to your technical analysis on another coin. In fact, this one here looks like it's a little bit kind of different in its performance overall, that it's worth looking at. It's one of these coins that we've talked about recently that's had like a real big downward trend, a bottoming out feature over here after the altcoin season for everything else in October, November, and it's been going up, kind of bucking the trend recently. So if a rising tide can raise all ships, then maybe this is one of those instances where you say, well, in a trend like that, the strong get strong. and the stronger get stronger. So you would be wanting to put your horses on your money gift horse money mouth, put it on the nose with these ones, wouldn't you? So staying above the 236 over here, key for us in terms of the retrace. And down the way at 1.7, we've seen that this is actually pushed past that area with its recent decline in prices just 16 or something hours ago in the last day when it went down to 138. But then of course it's trended towards topside, putting higher highs, very much bearishly divergent highs, so very worrisome on that front. And are we seeing this lining up therefore with anything over there on the left in terms of the grand old Duke of Fibonacci's York here on that? No, miles away from the 236 on this one. If you look at it like that, that's a piece of nonsense. Where else have we got? We could do Fibonacci extensions. At what point would you want to look at them? Between these two here up towards the top side would be the first thing to investigate. 1618, and we're between these two at the minute. Still got targets towards the top side. If we can maintain the 2.24, which is of course the 236, it's good to see that those are lining up nicely enough, close enough. But then there's also over here, how are we coming in terms of our story so far? All the way up to the 414. Can we maintain that or not? When we saw the rise up in Chainlink, we got to the 414 on one of the Fibonacci's and then weren't able to maintain it and drop down the way, looking towards that 236 first off. The 236, by the way, lining up with, of course, the median line of the Donchian channel here on the 4-hour time frame. If we take out this low here, then of course that's us structurally beating that, and that's taking out the 50%. So the 618 is a very scary zone for us. That takes out that structural area in there of that of that previous low. As you can see, these lining up, all the previous lows lining up so nicely with the Fibonacci retracement along the way towards the top side. Everything looking very good overall, apart from of course the bearish divergence. But we have a recovery somewhat in terms of the DMI so far with this push towards the top side. And what we don't have is really a satisfying low in terms of any decent sized candle. So you know, with this movement up the way, so that's very premature to call that divergent. And of course, all it would take would be a push past any of these sorts of zones to burn that off. I mean, if we move from where we are more or less currently up towards the $3 area, for instance, that would probably most likely resolve this, or at least come in with the actual high, and then you'd be saying it's really, you know, worth looking onto. So it's, at the minute it's obviously unconfirmed. So this is the zone at $1.29. Yeah, so $1.29, 174. That's a big risk management area, offering up decent shorting opportunities and long opportunities. Easy to manage your risk in around these zones. I mean, that would be a really easy trade to do right there if you were wanting to be tight on your risk management, with a break down past the 236. And if there was a retest of it and you took it and you said, well, it's going to fail, then you could get a 5-to-1 there with managing your risk between the sort of 70s and 80 zone, 70 and 79, to take a profit down there at 1.242. But I'm not a financial advisor, none of this is financial advice. Then equally as well, you can manage your risk by looking at it and saying, well, we're going to have the potential to take a long here at this zone. Whoops, that's a short. With a view towards one of these higher targets, and one of the higher targets could be 220. What was I thinking would be a higher target there? Just had it in my head a second ago. Yeah, so 240. Yeah, so right around about there for that two point whatever you want Fibonacci retracement area in there, giving you another sort of 6-to-1, 5-to-1, whatever. That would be 5-to-1, managing it around about that sort of a way. If we stay above that, I mean, like and these are just simple examples of what you could be trading based on the type of information that we're looking at with this show. And then of course you go down to whatever time frames you're looking at. That's kind of the idea anyway. So Arion Gross, that's an interesting name. Nice to have you here, my friend. Thanks so much for joining us. somebody, Shivam, said earlier on that he wanted to take a look at Link Litecoin. Where is he saying it? Where was he that he said it? Because it was Litecoin. Was it Litecoin USD or is it Litecoin BTC that Shivam asked for? Litecoin prediction, please. So that'll do then. Litecoin USD. What's going on here? Why is it all red? Oh, I've got a pitchfork on here. Oh, that's handy that I've got some TA from before. Oh, that's great. Oh, it worked perfectly as well from ages ago. Oh, that's fantastic. Oh, that makes this job easy. Sustained price action above $129, and then things are looking very, very good for this. It could continue towards the top side. We managed to put in our most recent highs on the 3-day time frame without any divergences at the peak up there on the RSI. Now, in terms of the stochastics that came in with a touch of divergence, we did see a pullback subsequently to that, and in terms of DMI, it came in with a touch of divergence, and we did see a pullback subsequently to that as well, taking us down towards that 129 area and the median line of the Donchian band channels there. So we do have this as already acting as support for us, and so far it's looking okay. What we don't want to see happen is for this to devolve into a descending triangle on the smaller time frames as we look towards this this area here as being our break point for us. If we do go down past that, you could be looking at having a measured move that's just somewhere along the lines of coming back down towards our $87 point. Now, of course, that would be testing the highs before the move up the way and the lower warning area of the pitchfork that we have in the go, but that's cool, or the lower area, but that's cool to do that and come in and find support. Overall, that wouldn't be too out of the realms of prediction and ties up with our previous high anyway, and it would be all part of the overall upward trend. But if we do actually want to break this towards the top side, we can see that the fake out territory lines up perfectly with the 236 Fibonacci retracement point. Breaking that invalidates this one, and of course we can resume looking towards the top side. There are other arguments you could make about this. If I jump down towards the 24-hour time frame, for instance, you could be trying to call this perhaps a Adam and Eve. You could also make other arguments like you've seen people making with regards to Bitcoin recently, with the idea of a slanted Quasimodo style head and shoulders. All of that adds up to the same sort of general principle. Are you taking out previous areas of structure in the market? Those are the three areas towards the downside, which currently offer up decent buy areas if you're going to be bullish on this, and that's at 119, 95 bucks, 97 bucks, and 75 bucks. Those are the three opportunities for you, and indeed those constitute your profit taking targets if you are short in this one, with an anticipation of any divergences that you're aware of playing out for you, such as none on that time frame just there to really be concerned about. And overall, if we were to be looking for any, then I suppose it might be wise to point out the fact that as it stands, this looks like it could be, no, it was lower. It was lower than the previous lows. But if you can see, this was a low here at this point on the charts. This point here was a low here. All right, then over here what you have is, of course, then with regards to this general area, is hidden bullish divergence. So maybe you know, the positive case will continue for this one, like we're seeing across the markets currently. There is a negative trend on the go. If we see this expand any worse, then you know, and we have had a sell signal coming in here in terms of the DMI just a couple of days ago, so we are in terms of negative territory. The question really is this going to be the fullness of what we need to see happen? Other ways of looking at this right now, and if you want to be more bullish about it, is that this is, of course, a wedge, and that kind of operates on the same basis of like a flag really for us with regards to the potential movements, and that would take us you know, with a continuation in that aspect, and that could take us up as high as things like $203 from where we are right now. That offers up a huge return on investment. Let's just bear in mind that movements within the structure that we're already looking at are probably going to offer up the lower risk risk, more consistent reward approach. But if you're going to be looking at this and perhaps thinking about it as a breakout, check out TradeSpotting's video about breakout trading. You'll find it very useful. I'll link to it at the end here on the cards of this video if I make it into a little snippet. But yeah, so let's just kind of bear in mind what we have to play with in the means in terms of the predefined charted course of structural support and resistance, and then what it would really constitute a breakout past any of these zones. And let's not get too excited about the prices of this until it's clear way above the 150s, or indeed clear below the 115s like we spoke about in terms of our targets, with potential movements towards the downside there coming in thereafter. That's your Litecoin prediction. If you want to have more information in terms of where we could potentially see the price action going beyond these points, then I'm happy to provide it for you. However, it's going to come at a feat. No. However, you know, anything beyond the zones I've already talked about are ridiculous in terms of the potential trade profit and profits that you could be making anyway. But if you are looking for higher for upside targets that go past $200, for instance, then your first one comes in at 205, where the 1.272 is. Then you've got 215, and then where most dies, I suppose, we'll be looking at for the next target comes in at $230. You know, obviously, if you're just playing this from 205 up to 230, you're looking at a more than 10% move with regards to the potential for trading this thing. So plenty of opportunity to be had there. Best to manage your risk wisely as ever. We are in the midst of a consolidation phase, which could ultimately look back upon which and say this was a distribution phase. The way that you would know that was happening would be by breaking the structural areas of support and resistance. Let's bear in mind little things like things look like on the weekly time frame here for us, and what we see is increase in volume, the overall upward movement in price. We're seeing that we've taken out this area on the left at 142 in terms of a recent high. If we do see a pullback and we stay above 75, this has the potential to operate as a sort of cup with handle for us, although that's a little bit, again, it doesn't really fit with the overall structure that we're looking at. But if we get, all of those could potentially offer up as buying opportunities for a bigger and greater move. I would prefer, and it would make more sense, most probably from a sort of sterile textbook point of view, to look towards continuation on this one up towards the 200s, then the 300s, and then the $430 price point beyond there, where eventually you'd be coming in at with an all-time high, equaling of the all-time high, if we did actually manage to make up towards the extension to our pitchfork on this time frame. Bigger picture stuff there. Right? Cool. Excellent. That was for the Shivam, but I guess everybody can benefit from a quick look at the charts. It puts a bit of context onto what is otherwise a bare chart. Really, whoops, if I just bring this up full screen and hide the drawings again, then just looking at this thing, it's not super difficult to identify key areas, really, and the significance of being up past this area in terms of what I was saying with the lip being above it, and staying above it. Obviously the significance of that kind of speaks for itself. Looking over to the left, we can see here this was an important area over there. Then in terms of that story about whether or not we did see a decline happening on the smaller time frame, as we can see in the weekly here, then you can look towards this type of structure as an example for that. And as well, that's what we're looking to currently on Bitcoin, to see if we'll see this play out like that, or indeed play out more like this, where essentially we had further upside coming in thereafter. This is the phase that the market's in right now, with some notable exceptions in terms of the altcoin world, such as Cover. Cool. Do you know what? That's great. I hope everybody is feeling great in the chat out there. I'm not seeing any other requests coming in so far that I've noticed. Nice to have you here, by the way, Can Han. You'll notice that I've done a section on Ethereum already. I'll probably extract that from the live stream here and go and make it a standalone video. So if you hit the subscribe button and the notification, you'll get a wee bell whenever I make that edit and bring it back out again for you. KDoc's already answered you though. I see go to 40 minutes for the ETH. And yeah, we covered it in extreme detail. Hit like and subscribe. Yeah, exactly. Good one, KDoc. That guy getting all of the necessary instructions from KDoc. Thank you so much for that. I can give you a spanner, by the way, if you ever actually want that, KDoc, of course. But with spanners come great responsibility. Jacob, Meg might be right. Rocky looks like a tall, dark strangler. What? Tall, dark strangler? Who is this? What? What? I asked Mystic Meg. What? I said, Mystic Meg, she said I would meet a tall, dark strangler. I look like a tall, dark strangler. Oh, right, okay. Whew. Jacob, you're in the right place. Yeah, okay, yeah. I'll strangle a TA for you. How is everybody? It's good to see you, by the way, again here, Julian Bonilla, and the likes of course, Jacob, that just got a wee bit of chit-chat there, Arian Gross, who got a shout earlier on, Canhan, and everybody else. And that's bringing me back. Nah, no Spanish, please. I'm good without. Yeah, of course. And that's bringing me up towards the end of the show. Okay, we've got 10 concurrent viewers. We're not setting the heather alight here. If anybody knows why people aren't tuning in and staying tuned in, if there's something that I'm doing specifically wrong, if it's just because I've not actually tied my hair up properly and I don't have my colourful light behind me and people really need that at the minute, then let me know. I'd like to know what is going on with that and what I should do to inspire more viewers to stay tuned to the show. Perhaps it's because I speak constantly. I notice when other people do live streams, they don't really chat very much. We could run an experiment on that, if you like. Maybe what it is that it makes people think that you're building up to make some really big point about something as you're doing your analysis, because you're sat there thinking for what to say, whereas I'm kind of able to say it all live. There's me thinking it's for my benefit. Maybe it's not. So let's just try it out for a wee minute here and see if anybody that tunes in stays tuned in. I don't know. For me, it doesn't seem to make for a more interesting stream. Just lots of live streamers right now. I guess that's what it is, really. Last question: how's the bathroom? Thanks so much for asking. The bathroom is. I'm going to need to get the lady to stump up for any repair costs that'll need to be done. But thankfully, the leak itself has stopped now, which is did take a long time to get stopped. In fact, if I'm honest with you, it got stopped on Sunday, but that was a long time for it to be leaking. Hey, it got to the point where it was running down the wall, and I was saying to her, this is running down the wall, took a picture of it and all this. You might want to turn your water off. Instead she decided to leave the water on and just get an emergency plumber out, and they fixed it up. It took them quite a while. I could hear so much sawing and banging and cutting and scraping and everything from upstairs, and now it's my turn. So the ceiling is stained, there's the wall colours all gone weird because of that water thing. Might be sagging a little bit, I'm not sure. Wanting to see if it dries out and if I need to actually do any work on there and replace it or not. I'm not sure. I mean, the water's been on it for quite a while, so maybe it's been damaged that much that it needs to be replaced. I don't know. Talking about news, there's been a Chainlink Grayscale rumour out today. Ooh, Chainlink Grayscale rumour. Shall we do another news section on the show? Do people want to do another news section? I suppose there's just the 10 of us here. Okay, there's just the 10 of us. Just the 10 of us. What do I need to do then? Wait, if you're saying that it's just that there's a lot of other live streamers out there right now, you're saying I need to somehow figure out how to take these other live streamers down. There's too much competition. Ain't enough room for the both of us. Is that what you're saying? There's more than enough people watching other live streamers. You've got to wonder. I mean, I saw Crypto the other day getting more than 12,000 viewers before I decided that it was just too much for me and I had to tune out. 12,000, so you'd think that more than 10 people could tune in. You'd think that, but you'd be wrong. Litecoin. So that was great looking at Litecoin, wasn't it? I hope you enjoyed that, Shivam. Ixler Bixler. Hey man, how's it going? It's just me, or do you need to know a good bit about taxes before I even think about trading? Yeah, it depends where you are in the world. If you're in America, then yes, definitely. If you're in Vietnam, I doubt it. If you're in, if you are in, hi Scotty, nice to see you. If you're in the UK, then it's a lot more simple than it is in America. It really depends where you are in the world. You could find out through an accountant, and I'm probably sure that the governments of wherever your jurisdiction is have got, I know the UK government has got information about it on their government websites. However, that's a very optimistic point of view, and that's good to have that optimism, but you'll also maybe want to know that 90% of people fail when they go trading. So if, as TradeSpot says, it depends on your trading style, and indeed that's true. If your trading style, for instance, is to lose all of your money, then you don't need to worry about tax, I don't think. Yeah. Oh, you're in the USA. Well, yeah, there's plenty of people. There are, yes, and the hassle that you have with tax was enough for some people to just think, like when Coinbase gave out free coins to people, for instance, if you do a survey and you get a free coin from Coinbase, so you get $5 of something, that $5 gives you that much more work to do when it comes to doing your tax that you just really can't be bothered. So there you go, there's that. And then like we saw at the peak of the Bitcoin market, there's always Monero, I suppose, as well. The reason why Monero went up from $140 to $190 and then tanked right back down again was probably because people were moving their money off exchanges in a way where they wanted to avoid paying tax, probably. So there's that. I mean, or else everybody really wanted to go on to some dark website or something like that, desperately at that one moment in time. Yeah. So where was the leak? The leak was in the bathroom, above the bathroom. It was above my shower, but the water dripped down and just kind of stuck around there and then went off to spread out different places. So unfortunately it didn't just drip through the plasterboard directly down and into my bath or whatever. That would have been handy. And no such luck. It was from their bathroom, from outside of their shower somehow. If it's sagging plasterboard, then yeah, replace. I'll send a link to Discord for the paint to paint over the stains. Brilliant, thanks so much. Wow, what a wonderful community. And I'll send a link to the lady for the paint as well, to tell her what I'll be buying and bill her for it. I wanted to do her a favor and not get her insurance premiums up there or whatever, but I'm pretty sure I could get it on her insurance if she doesn't stump up money for a paint tin. It's a pain stateside. If you're making good money, it's worth it to have a really good advisor. Exactly. And I like that, advisor. I write advisor that way too so often, but in the UK we spell it ADVISER, which is kind of annoying. But yeah, you're right. Or just an accountant and stuff like that. So if you're lucky enough to have friends who are accountants or whatever, then they'll maybe be able to give you some advice on that front as well. It's definitely worth doing. But yes, of course, Ixler, you've come to the right place in terms of learning how to trade, or at least learning how to believe in yourself, and that's going to be a big part of what it takes. And a lot of people need to relearn that after having kind of lost faith. It's good that you're at the start of this journey. Michael Douglas, who wrote Trading in the Zone, one of the most widely quoted books to do with the psychology of trading, said that people who are just new to the trading game are often psychologically where you need to be a successful trader, or much more similar to the psychology of a successful trader than people who've been trading for a wee while, and then they have to kind of get back to that point again. There's a certain lack of you don't have the same inhibitions whenever you are new to trading, and then so often then you get your fingers burnt, and then you make wronger and wronger decisions as you learn and somewhat unlearn lots about the market at the time. So you're at the prime point where you could go on to great success. You come to the best, in my opinion, the best YouTube channel to learn about trading. People here are also very friendly and will help a lot. Alex says he's reading Stan Weinstein's book just now, and that's a good idea as well. R.I.P. Mark Douglas, you legend, says Zoner. Yes, R.I.P. I hope he does rest in peace. Is that right though? I didn't actually realise he was dead. So there you go. But then I'm thinking of, did I get his name wrong? Mark Douglas is certainly Hitchhiker's Guide to the Galaxy, right? Is it also Mark Douglas? Yeah, they've got the same name. I've made this mistake before, and I've got that whole sort of dyslexic, confused thing in the past as I've misremembered my misrememberings. Yes, Hitchhiker's Guide to the Galaxy, though, very much RIP there on that one. Richest Man in Babylon, also Jinx. Anyway, yeah, read Trading in the Zone for sure. Definitely read that book. You can read The Disciplined Trader as well, but just read Trading in the Zone. Anyway, nice to have you here, by the way, Patrick Pellegrino. I obviously read what you were saying earlier on, but I didn't give you a shout out at the time, which I should have done. Hey, Alex, as well. There's a shout out for you as well. We see that Canhan, if you're racing against time, some people can't wait. That's cool. You have traditional IRAs and Roth IRAs for long-term investing. Plenty of options there, says TradeSpawn, which is cool. Bit of advice for people all chatting in the channel, in the chat with each other. So that's cool. Good to see that. Hope you're all doing very well out there. To everybody, whether you're in chat or, of course, just chilling out. Pingu says, boo, 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 boo. Actually, what Pingu said there was, "Hi all, should I buy BTC now?" If you'd asked me something like, if you'd asked me just earlier on, then I'd have said, yeah, great buy. If you'd asked me down here and here and here, I'd have said, yep, good buys, good buy to have. Even at 32k, I was thinking good buy. Here at 33k, again, you know, is it a good buy or not? Well, it is, but there's plenty of factors which could potentially work against you right here as well. We've got an idea that you could trade from just around about this zone. We drew it out in the Bitcoin video. So by the way, if you're asking that question, the best answer you'll get for it is the first 15 minutes of this video where I explain in detail across all the time frames why this here is a move that could be, you know, taken. Then of course as well, failure of this move is what could also show you a move towards the downside. Now, is that going to be right? No. Do I predict the future in the markets? No, I never do. You know, I never ever do. I think that people who do that and who claim to do that and everything else are just lying. But having said that, yeah, there's decent reasons, but it really depends on what you're buying it for. I mean, if you're buying it to watch it go up to these prices and then sink back down again, not so much. You know, if you're buying it here and you're ignoring the toilet paper 1, toilet paper 2, and toilet paper 3 there, then you're then I don't know. You're asking the wrong guy. Essentially, is the answer to you. Disciplined Trader is much of the same, to be honest, says Scotty Sniper. That's right, exactly. Just as he wrote Disciplined Trader first, and then he kind of wrote the better book, Trading in the Zone, and it's like, oh, have I read 2070 yet? Scotland 2070 yet? No, I've not read that. I forgot about it. I'm not going to forget now though that you've said it again to me, Scotty Sniper. I'm just copying that and sticking it over here in a thing here. Scotland 2070 health. This will be the book that you're talking about, no doubt. So I'll check that out later on. Just confirm with you that that's the book you're talking about. So that's cool. And anybody else who wants to read that and give me your opinion on it, and that's cool. By the way, I read books all the time. I used to have in the Discord a book section where I would talk about books that I've read, fiction books and stuff like that. But nobody's really all that interested, to be honest with you. And then I read educational books all the time as well, fictional books, factional books, and reference books and all the rest of it. So, you know, that's good. If you've got any suggestions for me as well, if anybody's got any suggestions for books that they'd like me to read with regards to trading, and then give and come back to you with that, that's cool. I also tried to do a book discussion thing in the for trading books in the Discord there not that long ago, and we were going to talk about the Way of the Turtle, a book about trading, which is quite a good book, and I read it and I wrote a whole bunch of notes out about it and all this, full-on book report. It was excellent stuff. Really put a lot of effort into that. Spent about 4 days trying to do this work for the community. I was like, I'm going to do this. I'm going to do it for the community, and I'm doing it really seriously. Going to read this book. It's not a massive book, but it took time to do it. and then I'm going to come up with all this stuff to say about it. And I tuned into the thing, and nobody turned up. And then when people did turn up, they hadn't read the book, so it was just me on my own. Anyway, The Way of the Turtle, there's a good book for you. So if anybody wants me to read a book and discuss it with them, then I will. But it's not like it was a lost cause. It was a worthwhile reading the book, and besides, it was a recommendation to me from Peter Hewer, who's one of the Rocky Outcrop-ticians, a very good guy too. Tokenomics, crypto deposits, and credit loans. Interest earned on loan deposit plus recent UK regulation agreements make Aave V2 a very good DeFi investment. Thumbs up, smiley face. Worth doing a deeper dive. I mean, Aave V2 this is just Aave, right? I mean, you're talking Lend version 2 is Aave, right? Or is like Lend version 3 Aave version 2, or what? Pardon me. So we're seeing strength in the DeFi space, you know, in that sense, if you like. I wonder what I was talking about there when I put those question marks on. Woo. I'll throw a lasso around the moon for you. So I wonder if this is as good as it gets or not. We've had this high come in here, and no doubt it was a bearishly divergent high. Yep. And like we've seen elsewhere, and no doubt in a smaller term time frame I could find some sort of little inflection in around about these zones. Maybe it's just as this one, which we took out with this down. And then of course as well, we've got this downward structure with the recent movements in terms of something like the 1 hour time frame, this downwardness here. But all of that is just giving you, sort of getting in your way of saying that overall things have been doing really well for a really long time here with this coin. It's a fantastic one. It's done really well, and everybody should, you know, be aware of its existence. And if we were to take out our previous highs, then of course we've got further targets towards the top side. Coming in with them at the minute in terms of just one way of doing it easily enough is just to look up towards where the 1618 is. That's at $248 from the Fibonacci. If you draw it in from the 19th of January high down to the recent low that we had just there with that correction there last night, up to where we are now, moving on past the 100% zone, i.e. taking out our previous high at 210, takes us up towards a potential target of 248. Of course, that's all-time highs and everything else on this one, so that would be what I'd be looking at on it. Now, failure to do so really needs to be examined in clarity as well. We can see here that this is clearly, you know, you've got this some people actually do this in seriousness all the time. Like, you've got a rectangle top here. It's not really, in fact, that's the wrong area. Like over here, it's not really for us quite anything of note yet. As we know from previous experience, in that the key area for us is, while we got down as low as 147, we didn't take out the key areas of, let's call the key area 140 for us at the minute on that. So let's just say somewhere in around about there's your shit history. No, where's your, I thought Alt H gave me a horizontal line, but it's not working for me. Whatever. There's your, aye, Alt H. Well, has my keyboard just gone off? Might just have done that thing that it's done. That's what we'll be looking at in terms of staying above, and this obviously is the sort of, let's just stick it in there at the wick. Then you've got the target at 248 and around a bit there. However, we probably need to bear in mind that this median line of this thing is going to be important for us. So I'll just put a parallel channel here in the background to draw that in for us in a second or two. And then the 618, of course, is going to be that real zone for us in terms of danger, high voltage. So I'll make that a red box. And I'll take this off. So this is, you know, again, when I talk about how you can use, how I'm not Mr. Fibonacci, but I always seem to use them on the channel and whatever else, is no small part a function of being able to visually describe things to people in a way that makes a good deal of sense without having to reach too far to do so. But you can see this all kind of in action here as we draw out the key areas anyway, to come up with significant sort of zones for us. And that's a better description instead of just saying we've got a rectangle top at the minute. So let's give this top line, in fact, well, no, that's that area there. There's more probably context to put on here for us. Another just, yep, so that ties in perfectly. So that is going to be our target for us. What about I don't really like moves that where you're looking back over the period of a whole year, etc. But it doesn't really work for me, that type of thing. But there's other ideas that are maybe worth exploring in that nature. Just to look back historically, see how we did overall. Oh, we beat that by a big chunk. That's crap anyway. Yeah, whatever. There's what's the actual realistic value of any of these coins as well? I don't really know what the tokenomics are behind them. You know, I don't know how they justify, so to speak, their prices. I mean, Bitcoin doesn't have to. It's purely speculative. Ethereum is essentially the new word for guais. I mean, Ethereum is gas. It's what it is. That's so there you go. That's your justification for its price, based off of its network activity, essentially. You know, what are the justifications for a lot of these other ones? It's hard to say. When it comes to things like these DeFi coins, they really should have that kind of figured out already. So yeah, I'll just leave it like that for now. That's cool that this is a coin that could go places, and that's a massive move up if we do get that move, which would be nice to see. Is this looking a little bit more concerning than the previous ones? Well, yes, it's got a clear, distinct downward aspect to this zone here. So this is why we can put extra importance on breaking these and then revisiting and asking, are we seeing the divergences on here or not? The divergence, which, you know, essentially did take out this previous low as well. Oh gosh, whatever. That's enough on that one. Maybe instead I could just sort of freshen things up a bit by putting more emphasis on some other indicators for a while. So the potential for hidden bullish divergence here is very real, as we can see on that point just there, tying in with this here on the MACD. There is a cross here on the no sure thing indicator, as we've also seen a cross the other direction on the. By the way, I'm tuning out soon. I'm kind of dragging this out in a sense, haven't I? I should just finish it off. Seen a positive cross up the way here on the stochastics at the neutral line, whilst we've seen a cross here on the no sure thing. Are we going to see this failure or not? This is a pretty good analog for the market. I mean, at the minute the upward trend is there. This has been a very good recovery, and that's why we're seeing the stochastics having crossed back round again. Need to look to structure. Over here, we haven't seen a downward movement in the last couple of days here, which is really taking out some key areas which we haven't really done along the way so far. We did a little bit, for instance, over here, etc. But we've not been doing, not had much downward trend in action during these pullbacks. It's mostly just been shocks and then recoveries immediately. Whereas we had a couple of downward movements with a bearishly divergent high. So there's that area to be concerned about. This is your fake out zone below any movements down the way down to that 146 area, offering up decent buys with that hidden bullish divergence coming in there and possibly painting a more rosy picture in the face of this potential turnaround. Of course, if we do see it continue down the way and we don't take out the structure, that we just looked to off the back of the stochastics, then we can revisit this idea here where we are seeing this, of course, showing us a turnaround there on that one. Now, are these potential sort of, in a sense, false signals at times? Well, we've not really had much of a cross in the past here, which has then been false. Could this be the first one in its history? It could be. If we see movements down the way, then I'm certainly keeping an eye out at 170, 147, and 117. All of those offering up, you know, depending on how the trend's looking at that point, very, very, very good opportunities for managing your trades and your risk and all that in those zones. By the way, if you're just joining us, give me a wee mention in the chat box. Say hello. I'll say hello back to you. Good to see you there, Leonardo Pinto. What's the best soundtrack to trade to? What's the best soundtrack to trade to? I wonder. I've never been a massive listen to music and work at the same time person. It's too often get into it a bit too much. The best song to trade to is, of course, "The Whole of the Moon" by the Waterboys. So stick that on your Google device if you have one, or whatever, your Alexa at the minute, if you want to. "The Whole of the Moon" by the Waterboys, just so you know. And then in terms of just doing anything, classical music's normally the best one to have in the background, or lo-fi chill music. In terms of an album that I've given a good shout out to, then what's your man called? What's your man called? I've given shout outs to, put on his, and who's an outcroptician, and Fritham. He's got a pretty good album. If you want to search on YouTube, he's an outcroptician. So if you're looking to sort of support a member of the community by looking at their music on YouTube, then search for FRY, or the new letter I just invented, WAR, which is R followed by Y. There you go. So FRYTHYM, Fritham. Check that out. I like to study the house music. Yeah, I don't like playing house. I grew up in what I would describe as being the absolute pinnacle of clubbing music stuff and all the rest of it, and nightlife. Certainly in the cities that I'm familiar with, in terms of the offerings that they had then, including Ibiza, compared to what there's like nowadays. And that means that I am therefore qualified to talk about generic house music. And to be honest with you, not a massive fan of generic house music. I far prefer something when it's got a name in front of it. But I think that the modern generation refers to lots of types of house music as just saying house music in general. So it depends what you're talking about. If you're talking about Chicago house, for instance, or you're talking about progressive house, or you're talking about sort of something like trance or whatever. I mean, a lot of kids these days talk about it as being that, the best one to listen to, of course, is the album by my very own gentleman father. He's a legend himself. Let me just pin that to the top of the chat there. So if you actually are looking to listen to anything right now, the best album you could possibly listen to, I've just pinned to TradeSpawn, linked to it. I've just tried to pin it to the chat. It doesn't seem to be working. Try to pin that to the chat. You can do it, TradeSpawn, if you want to. You can then listen to that one. Listen to that one. It's a great album. You'll really love it, by the way. It's freaking awesome. Well done to my father for making it. Mission Impossible soundtrack. Dum 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 dum. Yeah, totally. I had some funky house 1990-2005 on earlier. You see what I mean? K-Doc knows what I'm talking about. See, funky house. So it's like, so just generic house music isn't my cup of tea. But then again, you're 23, Alex, and I reckon that what you talk about when you say house music is you're kind of talking about the whole category, because what happened was it started off and house music was invented, and then various types of house music then came off the back of that. For instance, what K-Doc just said, funky house, and then the likes of our generation were like, oh, I'm going out to a night, what type of music is it? House music. But what type of house music is it? Funky house. Oh, all right, okay, I'll go to that one, etc., etc. And now for some reason I can't pin either, and now yeah, so now people just talk about it as it being house. Anyway, cool. There we go. Sorry for going down a bit of a rabbit hole there. The club scene is where Rocky Outcrop discovered STC Tezos. Coincidence? I used to make jokes like that. But I don't do that. I'm a serious adult YouTuber nowadays. I don't make jokes like that. But did I first discover Tezos in a nightclub? Yeah, that would be right. Where would it be for me that I suppose if you wanted to put a time on a date on it, I would have first discovered Tezos in the club scene in was I in Ibiza when I first discovered? No, I didn't. I wasn't. I'm not going to include any house parties. House parties aren't real. Yeah, it would have been in a club in 2003. Would have been when I first discovered Tezos. Yeah. Yes. Jelly Jazz House. Yeah, exactly. Jelly Jazz House. Exactly. Yeah, that's my favorite. It's my favorite. I want some jelly jazz. Where's it? Put on the jelly jazz. Anyway, yeah, that was cool. That was nice. That was fun to look at. Ave the crypto coin. Now over here, back to Bitcoin, back to reality. So we're struggling here, obviously, at the minute. You know, we tried and failed, and now we're trying again. Let's play a little game for the next couple of minutes. Okay, we're on a new candle, 50 seconds in. Is it going to be higher or lower? Higher or lower? Everybody guess. Higher or lower? Well, so let's play higher or lower. At the minute, if it goes higher, then it's going higher than that white line or lower than the white line. So let's see, with the 1 minute candles, are we going to go higher or lower? Everybody, you can get your guesses in now if you want. What's going to happen? Oh, I wonder. Ooh, we're higher right now. Oh, but don't get carried away. Maybe we'll end up lower. Ooh, no, we're higher. Whoa, this is looking great. Oh, wow. Well done to everybody who said higher or thought higher. Well, nobody said it, but if anybody thought it, I'd say discovered STDs, GBP a lot in clubs. No, didn't. Shire Horse Street Ives. Shire Horse St. Ives. That the Shire Horse. Oh, back in the day, dancing at the Shire Horse in St. Ives. St. Ives is a beautiful place. But when I went to and I've told this story on the channel before, when I went to the steakhouse at the Tate restaurant, I had to stand my steak back 3 times. 3 times. Yes, 3 times. To be recooked by their chef. They came and they apologized, and I says, oh, that's okay, don't worry about it. Then they came out the second time and I says, well, you know, 3rd time's the winner or whatever. And they came back the 3rd time and I was like, look, it's getting a bit embarrassing, right? I tell you what, I'm just actually going to send this back. I'm going to eat the chips on the plate and then I'm going to leave. Okay, that's what's happening here, and I'm not paying for this. And they were like, absolutely, sir. Absolutely. I was like, I hope you realize that your man can't cook. Steak. So higher. Yes, we had some guesses in. Well, we're still. Wait a minute. What's happened here? I look away for a second. Yeah. No, it's all good. I thought we were lining up before though. Was I talking for 3 minutes there? Well, it's me. I wouldn't be surprised. Maybe I was. We're still higher though. Lower just cause. Well, good one. Thanks Trade Spotting for helping. Alt season before BCC all-time high. Ooh, that's that's one of those things. Like, is it possible? Are we going to see an alt season before we see another Bitcoin all-time high? I was already on the Bitcoin chart, but I just decided I'd move to the Bitcoin chart there. I'll go back to the Bitcoin chart here. That's better. Are we going to see that before we see an all-time high? I wonder. Are we going to see this operate as a head and shoulders? This is the 1 minute time frame, so let's just blend out a wee bit. Sorry to everybody playing that game at the minute. I've ruined it, haven't I? To the 3 minute time frame, what you can see is we've got this upward movement, so that's an uptrend, and then we've got this area, then this area, then this area. So that's a head and shoulder. That's a shoulder. That's a head, and that's a shoulder. Then we've got this downward sloping volume. Right. What does the RSI look like at the minute? as it happens. You wouldn't describe that as being like a head and shoulders so much in the previous instance on the charts necessarily, but it has that aspect to it where we've gone down past a sort of neckline, broken on down. It's done movements I would associate with head and shoulders, not least of which having a bearishly divergent top there. Okay, so there's that. We are seeing the potential for a cross here, but will we get one or not? It's just a bit looking like it's not. You know, this is, well, as you would expect to see at head and shoulders shoulder, you know, testing it. Movements up past here break the pattern. Movements down below create it. This is fun, isn't it? This is fun, isn't it? We're doing some fun technical analysis for everybody. This is on the 5-minute time frame live right now in front of your very eyeballs. So there you'd have that. Let's just kind of do it like this sort of a thing. I hate this tool so much. I think it's one of the worst designed tools on TradingView. Like, must have been one of the early days ones. So do we want to call it something like that? Now I know that's not lined up as well as I wanted it to be. I actually kind of wanted to have a more straight neckline than that, to be honest, as well. So just try and give me one for a second. So yeah, right. So we've got it now, okay? So we've got head and shoulders on the go, potentially. Okay, so that's what we're seeing right now. And of course, if you're doing this technical analysis on a bigger term time frame, it'd be exactly the same, more or less. More or less. Shall we take a wee quick look at this, at the MACD while we're at it? This is just the MACD histogram. What we're seeing here is a low, which is indeed lower than the previous low, so that's not hidden bullish divergence there. That's just a downward momentum gathering. So what we're seeing is the momentum towards the downside gathering in this period here as the volume declines, as we put in that there. So that ties in perfectly with the head and shoulders narrative. Of course, this could fail because 2/3 of the time head and shoulders fail. Something like that, 60%, something around 60, 65%, something like that. Head and shoulders fail 2/3 of the time. What we're seeing during this period of consolidation is the choppiness on the DMI there, so that's to be expected, but it's not gone into pure extreme volatility crazy town yet. With regards to the most recent move, right, okay, so we've moved up above the moving average, and we are of course looking up the way a wee bit, then decided not to be. There you go. In the end, that's what ended up happening with that one. So if we take out this moving average here, then maybe we've got some problems for us in the short to medium term. And you know, that trading, that idea that I put on the charts earlier on in terms of how you trade, for sake, that idea that I put on the chart earlier on in terms of the move, fuck it, we'll leave those lines on there. In terms of this trade here, what do we see here with regards to all of this? Well, just wanted to show you that the measured move clearly off the back of this here doesn't actually destroy any of this here in terms of the concept. So, you know, looking across different time frames and different ideas, maybe we want to put this in just here. You know, say we actually get a retest of the neckline, that gives you your best opportunity to get a failure on it, or indeed we want to tie it in here and instead talk about it like this sort of thing and have a smaller take profit on it, and because what you're doing is a counter trend, a counter pattern essentially move there. Instead, does that give us about 5-1 at that point? Yeah, so then you'd be looking up towards your take profit target 1 instead of the other one, if you're looking to sort of counter trend this head and shoulders. Do you see how risk management and looking at the charts and everything all ties together? I hope you do get that idea, you know, from what we're doing here, because this is what I'm trying to educate people about. You know, how to trade essentially, but not done in the form of crap lessons. So you've got this if you were trying to trade it as a sort of saying that it's going to fail from the neckline. You've got this if you think it's going to fail by taking out the shoulder area. You've got this if you think it's going to fail by taking out the head, saying that if we actually go down past our previous area of support and resistance, then our support essentially, that we're breaking structure and it's no longer worth staying in that move, in which case this is how you're rationalizing that short at that point, saying, well, this is where the risk of staying in against this exceeds, it goes up exponentially and there's no point any longer, etc., etc., etc. And these are all counter trend defending against a pattern here, which you could absolutely trade if you wanted to from a bigger term perspective, but it gives you 5-to-1 moves, and those are your 3 ways that if you had a head and shoulders that you would get a 5-to-1 move off the back of it. Fuck's sake, right? Okay, so that's how you would do it. The 3 ways that you would do a head and shoulders off the back if you were looking to counter trade it and say that the pattern's simply going to continue and that's going to fail. And indeed, the way that you could trade the head and shoulders pattern itself, I think, is fairly self-explanatory, you know, in terms of going down past that point where your measured move is. Now, going for the full measured move could be greedy. If we take this measured move and stick it in around about where we have our neckline, then we can see that there's a couple of lines. Actually, that's not true because they're up around about here. So that's not what they are. We can see that there's actually very little in terms of looking to the left for support right at the measured move target. We could even go beyond it, therefore, you know, down towards the 32 again, and that would be a danger, of course. Or we could just simply not manage to achieve the full thing and find some support and resistance in at this area here, as you can see, denoted by the VPVR and our previous area of inflection. So that's all you'd be looking to in this area. And you see, I often say this thing, I often say that there's always time for technical analysis. If you've tuned into the channel for a long time, you've definitely heard me say it. Here we are looking at a small term time frame things. We're talking about whether or not on the 1 minute the line would break above that white line, whether the price would break above that white line on the 1 minute time frame. We were talking about that before, and then I decided to do some TA off the back of that whole discussion, and that's what it led to. Ta-da! So, you know, there's always time for TA, and that was the 1 minute time frame. And where are we now in the 1 minute? Oh, we're below it. So, you know, in terms of studying this thing and how you would do trading, that's how you would do it. Okay, now in this position, I would be able to go and make trades happily enough off the back of all this. Now, the trade that I didn't mention that it would be the easiest one to make, you know, just in terms of what we were talking about, and I thought when I was drawing this in, it kind of spoke for itself, is that the easiest trade to make is simply to trade between those 2 points right there. In terms of this being the 1 minute time frame, it only offers you up a 0.7% move, and it's not even going to cover your fees and stuff like that necessarily. However, in a bigger term time frame, that would be an absolutely acceptable move to be trading. And of course, as well, then there's various other concepts that you could put around this. This is just one of the many. I'm never one to be a concept monogamist. You can have as many concepts as you like, because ultimately all you're doing is describing the same story. So often when somebody says to me, I see something on this time frame, I hear them saying it, and I think, well, what they're saying is that they're looking at this type of thing, and this type of thing means that there's probably these 10 other types of influencers that are coming in, and that's the end result for them. And it could be a variety of different things that they're actually seeing anyway, and that's kind of how I think about things. Right, anyway, I've overdone it again today with a TA, I believe, in terms of like how I've been streaming for 1 hour 55 minutes to very, very, very much loved, very, very, very much loved, and very, very, very fantastic, and the most amazing, bestest people audience in the world ever. However, indeed, a very, very small audience, and I've been putting out this really big top quality information, I do believe, anyway. So if anybody has anything that they would like me to talk about, having, you know, me talked about quite a bit today, now's your time for your sort of AMA section here. If you want to do the FAQ, the AMAs, the clarification points, or any of that, then you have the time to do it now, because when my stream counter says 2 minutes or 2 hours, I will be hitting the end stream button, and it is currently 1 hour 56 minutes and 14 seconds into this show. So it's time, and the time is now. Bam, bam, bam. So just so you know, that's what's going to be happening very, very soon. In fact, so that there's no mistake in it, I'm actually going to go over to the final scene, ladies and gentlemen. That means that my face has now disappeared, and I'm going to make my chart full screen. Gonna move it over to the left a bit so it's not hidden by the chat box so much. And I'm going to run the credits. That's right, the credits, ladies and gents, the very credits, the very self-same ones themselves. Where are they? Hopefully, if I push the replay button on a couple of things, then they'll show up in the credits. So I'm just doing that real quick. Of because I want their names to show up, because the guys from the last one that made that made donations and stuff. A couple of people donated after the stream had ended. Thank you very much to Marcin for that, by the way. So if that's you, then I mean, if you're the type of person who donates after the stream's over, just know I always appreciate it. Where's the blooming thing to roll the credits? Rolling credits now. Roll credits. There we go. Roll credits. Do their names show up? Do their names show up? Do the credits themselves show up? Yes, the credits do show up. Will their names show up though? No, it didn't. Damn it. Oh well, looks like it has to be during the stream. By the way, K-Doc, you're welcome. You said thanks for today's TA. You're welcome. Alex, you said thanks. You're welcome. You're absolutely more than welcome. And if you're not familiar with the show that much, Alex, by the way, and to anybody else, I do a reverse roll call. So what happens is I run back through the chat and see everybody that's been chatting and give them a shout out. So if you want to shout out here, then this is your time to do it. Likes of Photo Finish, people that have had shout outs recently have been, like Dvorikis or whatever, they've come in just for the shout out at the end. So you're welcome to join in if you want a wee one. Then that's cool. Thanks to the TA, says Zoner. Have a nice weekend, guys. Yeah, have a nice weekend. I might come back and do another video over the weekend. I think I probably will, because I think people deserve it. Be interesting to see how all of this chat pans out. How are we looking in terms of the easiest move in the world for trading right now, by the way? Well, there we have it. You know, the one that I said, which went without saying during all of this chat here, was the move down towards the neckline. Now, where the neckline comes in at is up for debate. You know that's kind of like, you could debate it and you could say that that's your neckline there, and we just kind of had a move here, whatever. I'm not actually trading this right now, but I showed you how I would be and how I'd be thinking about it. Let it be known as well that there are down here now moved 0.6% of the overall 0.7% move. So we've done the vast majority of it. So, you know, at this stage here, I'd be more than happy under normal trading circumstances to stick a stop loss in a profit taken area as well, by the way. So for that, and that means that you've managed to benefit from a pattern by playing the pattern out, not how the pattern is described to be played in terms of waiting for confirmation, i.e., you know, a break of this area here, to then play it for the move down the way. And bearing in mind then that the size of the measured move of this head and shoulders here in terms of percentage move is 1.12, and you've got over half of that now. You've got the full 70. Look at that. You've got the full 80% now. You've got 0.8%. You've got the full 0.8%. That's almost as much as you get from the measured move of the head and shoulders itself, ladies and gentlemen. How wonderful is that? So you've already, before you've even made any, you know, done anything off the back of this here, you've already made as much money as you would make if you were right. You know, if you were right, if you think it's going to break it, or if you think it's going to break it towards the top side or something like that, you've already made as much as if you were right. So ladies and gentlemen, that is how you trade. And by the way, let me know if any of you out there were scalping that move as I described it there now on the show. If you had have, then you would have just made some money, and that's cool. And that is, and when you see people donating to the channel, that's not what they're donating for, just so you know, everybody. That's not what people donate for. They donate just to support the channel and to be nice, generous people. But in terms of like what I donate to you, I hope that you're able to take that value from the lessons that I put out there on a daily basis. I really truly do, because I put my heart and soul into these things. And as you can see, today's episode has been yet another standout one for us. So much to be had in this, and it's fantastic that you choose to join me and be here for it. Reverse roll call coming up right now. Michael John Scott, not sure which one would be worse, K-Doc, that or having the vax. So interesting chat as ever, keeps on going on. Let's see, I could wear a bikini, John, if it helps, says K-Doc. Right. Well, let's see. Let's get some ladies in the group. Only when we have our bally me up, there are some interesting eye candy. Yeah, absolutely. And you know, nobody likes a sausage party, not even the bratwurst convention I presume that they have somewhere in Germany. They probably don't even like a sausage party either. If you're looking to help support the channel, then join the Patreon. I massively appreciate it. Of course, I currently have 0 active Patreons, so if you want to be that first actual on the list active Patreon, then that's totally, you know, fantastic. You can do it. Big shout out to Joel, however, who is the one person who, my very first ever Patreon, who joined up just to get the thing going and is on a membership tier that doesn't exist anymore. If you want to do that, then that would really be appreciated, because of course, you know, I'm trying to put out the value here for everybody. And what can we see? Well, we've now had this thing come back up and retest at this zone. This is where you're asking questions about the head and shoulders, but I'm going to leave that in your more than capable hands. You can look at it yourself. What did we already discuss with regards to this area over here? Only that thing, only that thing. This is now where we see a little bit of inflection here, right on a line that we already had drawn on the charts. I mean, it's all happening in front of your faces all the time, ladies and gentlemen. That's just how we roll here, and that's why the Rocky Outcrop competitions are the best traders in the very world themselves. Reverse roll call happening now. Trade Spawn, thank you so much for joining me. K-Doc, you're a star. Michael John Scott, known as John to his friends, which we all are. Thanks for joining us, John, as ever. Shivam Anand, thank you, he said. Well, you're welcome, my buddy Shivam. I did the LTC technical analysis that he was asking for during the show. Zoner, thank you so much for joining in with your laughy tear face. Remember to share this video with your friends, everybody, and hit that like and subscribe button if you haven't done so already. Scrolling on up the way, we can also see that we had Alex, a 23-year-old who likes house music when he listen to house music when he's trading. Good to have you here, by the way. I hope you are still tuned in. If you are not tuned in here, I'll still answer your question anyway. What time frame of moving average do you use? What time frame of moving average do you use? That question, the way to answer that question is to say, I need to make a video explaining how that question you asked doesn't actually make any sense, buddy. And then when you've watched that question, you'll not only know what time frame of moving average I use, but also why that question you asked there doesn't fully makes sense, to be perfectly honest with you. But anyway, continuing on with the reverse roll call, we also had Leonardo Pinto on the show earlier on. Thank you so much for being a part of the chat. We also had Scotty Sniper, who called in here to say how handsome I am, as ever, because I am, you know, so handsome. We had Ixler Bixler, who asked a very good question about what they should learn about tax when they're based in the USA when they're trading here earlier on as well. So thank you so much for tuning in. We had Pingu, who came along and said, and even though he said that, I still actually answered him really pretty well. Then we had Can Han, who came along looking for some Ethereum technical analysis, and he was more than satisfied to know that from 40 minutes in this video there was Ethereum technical analysis which covered everything he needed to know in extreme detail. Then we had Patrick Pellegrino, we call him Mr. Dangerous around these parts, but of course his name's Patrick. Thank you for joining us. Jacob Dement, you are a legend in the making, I think. Good to have you here, Jacob. You are always looking out for you said earlier on that you asked Mystic Meg for some advice, and it's funny with your surname being Dement. Don't ask her too much, you don't want her becoming demented. With Jacob Dement. Arian Gross, you tuned in earlier on here to say Dogecoin is nice. Well, that's great, I'm sure it is. I hope you've got some dodgy coin snacks to feed it. RT Pile, you came along earlier on as well, and ever present here, really do appreciate it. NASDAQ is a dealer's market, NYSE is an auction market, for instance, said RT Pile earlier on, with a bit of that somewhat esoteric information for people. But of course, that's the type we have here. All levels of trading, all levels of knowledge, part of the community, everybody welcome all the time. Bruno Telugine, you tuned in earlier on as well, and it's always good to have you here, my friend. I hope you stuck around for the reverse roll call. We also had Christopher Pipe tuning in earlier on, and you did actually have some chat in the chat, so it was good to see you interacting with people. You guys think that we are at the beginning of the bull run rather at the end? Well, no. Christopher, by the way, you've obviously not been tuned into the channel since March. I told everybody on March the 13th, that's right, Friday the 13th of March, that the bull run was starting, or was it the 14th of March? Regardless, immediately following the low at 3k I told everybody the bull run was starting, so you know we've been in it for almost a year now. There's your answer for that one. Stanley Knife, you also tuned in, and thank you so much for everybody. And that's that. I'm tuning out now. Scrolling back down to the very end of the chat just to see if I missed any of these last second messages. ETH is falling quick again. What do you think about it? Well, there you go. Sorry, Canhan. If you were to donate to the channel, for instance, then I would be happy to stick around and give you my opinion on it. You can find the donate buttons in the description. You can use super chat there or whatever, but it's past time for me to be tuning out now in terms of, you know, I've already done more than enough of the free stuff for everybody. Hey, technical analysis that you get here is second to none, and devalue myself by giving it out so willy-nilly for free. So I'm afraid I'm not going to give you any answers on that one. I'm sorry, mate. Is what it is. Save with Crypto says, I was late. Sorry, Rocky. Look, you're never late. You're never late. You're just fashionable. It's good to have you here. You made it in time for the roll call. If you're going to tune in at any time in the episode, then this is the time to do it. It's good to have you here. You'll find some really good technical analysis in here on the show. By the way, as you can see here, this area of consolidation lasts for 159 bars. This is the 1 minute candle. This is of course a 2-hour long episode of the show, so just here in the last minute, this is what's been happening throughout the entire time of the show. Now we're making it back up the way, and wonderful stuff. That the other move that we talked about as well has now just been initiated. That's a good one for us. Is that going to actually take the full thing? Absolutely not. Could we have a retest of all these areas? Absolutely could. Is this just the 1 minute time frame? Yes. Don't go crazy, but there you go. That's everything that you need to know. I think that, you know, I tell you what, you don't get better than that. The fact that there was on average around about 10 people watching at any given time just shows you, I hope anyway, that the level of the authenticity that I have, or the how much I genuinely mean it when I appreciate people tuning in, and you'll all be here. You know, there'll be a time in the future when you're here and you tune in and there's 1,000 people watching and messages flying by at 100 miles an hour, and then you will think to yourself, why, I was there, and that's the effort that Rocky put in back then. I know he's not just doing it to play to the crowd. All the best, everybody. Have a wonderful weekend.